is on now because I'm not able to view myself. My video is on.
People,
You are
Yes, sir.
audible, but I cannot see you.
you cannot see me.
Okay.
Navneet sir, you switch on your camera.
No.
Sir, I am V. Murli speaking.
Yes. Okay.
Whether I am audible?
Yes, yes.
Hello,
Yes,
sir.
yes, sir. Yes, sir.
Yes, sir.
Yes.
Murli sir, good afternoon. You are audible. You are visible
Audible, sir.
also.
Audible.
Audible, sir.
Audible. Navneet sir
Yes,
is
sir.
also visible and audible.
Thank
Okay.
you. Thank
Okay.
you.
So,
Thank you. Thank you.
good afternoon to everybody. This is Rajat Kumar Bosu from the Tax Research Department of the Institute of Cost Accountants of India. I, on behalf of my colleagues in Tax Research Department and Direct Taxation Committee, I welcome all of you to today's webinar on all of you know the subject. It is on the inventory valuation, the draft form 6C, which has been released by CBDT for public comment. So we are today here for a webinar on this draft. Our today we have with us our chairman, Direct Taxation Committee, CMA V. Murali sir. Sir, a warm welcome to you. This is the first webinar after you took charge of the chairman of Direct Taxation Committee. And we have today CMA Navneet Kumar Jain, our newly elected council member, central council member. Navneet sir have been our pillar in our tax research department, I would say, Navneet sir, because you have been with us for last 5-6 years and continuously you are helping us. So today's speaker is Navneet sir. I would now request our Chairman sir, Direct Taxation Committee, CMA V. Murali sir, to say a few words to start with. Murali sir, up to you.
Thank you very much, Mr. Rajat Kumar Basuji, Additional Director TRD. On behalf of the Institute of Cost Accountants of India, on behalf of the Direct Tax Committee of the Institute of Cost Accountants of India, I extend a very warm and cordial welcome to our resource person, a very knowledgeable person, CMA Navneet Kumar Jain sir. Is a FCMA, MCOM, MBA, LLB, insolvency professional, postgraduate degree in various verticals, and such a erudite person is coming here and is our opening batsman of the Direct Taxation Committee meeting and this webinar. It's a very, very important topic is going to speak. One, what I find in Navneet Kumar Jain, the type of enthu, the type of morale boosting and encouraging posture, which I really like in him. Actually, he's the person who really started. He said, we have to do, the reason is we have to get the comments from the members. The time is running out. It less than 15 days is there. So we have to do, sir. Yes, you go ahead. This is what I mentioned actually. This inventory valuation under the Income Tax Act, mission towards transparency with the CMAs. It's a great topic, relevant topic. It is said behind every successful business decision, there is always a CMA. What is the implication of today's topic? Behind every successful income tax assessment, there is always a CMA. It is like this now. See what is happening today in the what are the far-reaching changes. The CBDT has invited comments on the draft form number 6C for implementing the amendments made by the Finance Act 2023 with section 142 in respect of subsection 2A of section 142 of the Income Tax Act 1961 regarding the inventory valuation. And this one, notwithstanding any other audit taken place, notwithstanding any other audit under any other statute, this has to be done under this section. This is what very important. So even if there is a 3CD report is there, even if there is any other statutory audit report is there, that will be kept aside in case if it is selected under these particular provisions, then a cost accountant, it's an exclusive territory. He has to do this particular thing based on his expertise, his exclusive competence. So thereby the government of India has recognized the important role of CMAs, their competence, their acumen, as this particular specialized activity is concerned is inventory valuation. So what is happening? Finally, whatever Form 6C, finally what they want. What is the valuation as per 3CD or as per the audit report? What is the thing the CMA, the practicing cost accountant, what is the valuation he arrives at? What is the difference? And what is the implication with regard to income tax? Whatever the variation on in terms of income tax, how much is the implication or the impact? That is the reality. So at a macro level, as the chairman of the direct tax committee, what I find here, an exclusive territory has been created. This has got so many signals to send to the people in the banking sector also. When you are recognizing here for stock audit, they have to automatically give, because in the income tax, central government in the income tax statute, they say you have to do this inventory audit. That is a signal. So whatever the form number 6C comments and all that, what is very much important in this Finance Act 2023 is that our role, our importance, our specialization, our competence with regard to inventory valuation has been recognized by the central government. This is a good signal, augurs well for the profession. And when you see the inventory valuation, where it, see, simple one, we need not go into the very, very complicated. If you take a trading and profit and loss account or a manufacturing, whatever it is, when there is a GP is going up, normally the people will play with the inventory closing stock. If the closing stock is understated, in the case of bumper profit, your GP will come down. Then you create certain expenditure, you have the net profit. If you try to do, the fund flow matching will be a problem in balance sheet. Because in the asset side, whatever this inventory you put, the sources is important. So this particular inventory, the closing stock valuation, assumes a greater significance. But what is the challenge for our profession? See, knowledge is power. We are living in a knowledge era. Knowledge is power. Idea is power. No longer a person who is having a capital only called as a capitalist or a promoter. What you require is a fertile idea, sustainable idea, scalable idea, an idea which is capable of being converted into commercial proposition. So here our members have to see what is accounting standard, what is AS2, what is Ind AS, all those things, 145 of the Income Tax Act, and whatever the Income Tax Act, what is involved, the connected income tax, what is the valuation method we have to adopt, we have to understand. All those things are assuming a great significance, especially ICDS, Income Computation and Disclosure Standard, will be applied for valuation of inventory, which is a very, very important ICDS 2, the Income Computation and Disclosure Standard. As I told you, AS2, India AS2, all those aspects, 145A, this assumes a greater significance, and we have to thank the central government, our Honorable Prime Minister Modi ji, and our Honorable Finance Minister Shrimati Nirmala Sitharaman ji for recognizing our importance here. It is how many cases will be taken up, how many, that is not the thing I'm talking about. How many people will be able to, but then it is a recognition. Exclusive territory. It is not along with somebody, but it is an exclusive territory. This gives a signal, strong signals. It is there. And I want to tell you, as the chairman of the Direct Tax Committee, the 16th August 2023 notification was given, and this inviting comments on the draft form number 6C. On or before 31st August, we have to give the comments. Kindly go through that. Everything will be there step by annexure. In the annexure, there will be a report, there will be an annexure in various things, work in process, all those things will be there. Finally, as I told you, the impact is finally what is there in 3CD evaluation report given by some other auditor or under any other statute. And when you are doing this cost audit report, how much valuation you arrived at, find out the difference. What is the impact on the income tax, which you have to tell. So we have to play a sheet anchor role here with income tax department, especially to plug any revenue leakage. That way, this particular topic, excellent topic, I would say, it is a mission towards transparency. This is a transparency. This is very, very important with the help of CMA profession, cost and management profession. And it's a great salute for the regulators, income tax department, and our honorable Finance Minister for reposing confidence in our profession and gives this responsibility, and we have to live up to the expectations of the society. This is very, very important actually. Dear members, we must always aim high. It is better you get a stiff neck from aiming too high than a hunchback from aiming too low. After all, it is not the years in your life, it is the life in your years that counts. What is the difference between the dream and the aim? Dream requires effortless sleep. Aim requires sleepless efforts. So sleep for your dream, wake up for your aim. Accept the challenge. We will repose whatever confidence reposed. We live up to the expectations of the government regulators, and we have to prove thereby our territory will be expanded. This is only a what you call small showroom. You take it, but go down is elsewhere. There are so many opportunities waiting to be conquered, and we will prove that whatever our specialization will be helpful for all the stakeholders of the society, government, consumers, assessees, everybody, you should be there. Thank you very much. I again welcome all the members who have come here and the excellent resource person, and of course our officials of the department who has done an excellent job at a very, very short notice. They have done it, and I have to give a great salute for playing a sheet anchor role. And I thank all the officials involved into this particular program also, and over to him. Thank you.
Thank you, sir. Thank you so much for your encouraging words. Definitely, when we have Navneet sir with us today, we'll be discussing all the aspects which you have mentioned in AS, ICDS, especially ICDS 2 and other ICDS also. There are some other, I think Navneet sir will be deliberating shares, debentures, and all those things are there. So before we get into the discussion, I would like to apologize before the participants joined here for our delay, inadvertent delay, because it was for the technical glitches. When we are dealing with technical things, these are the things allied with that. So we are very sorry for the delay. It was unintentional, but you know the technical glitches are always happening. So now I would request our Deputy Director of our department, CMA Tinku Ghosdas, to kindly give a brief of Navneet sir for our participants, our viewers and members here. Over to you, Tinku.
Thank you, sir, and good afternoon to everybody. Today we have Navneet Kumar Jain, sir, as our guide. He is a Central Council member for 2023-27 term. Presently, he is working as a practicing cost accountant, insolvency professional, and consultant on GST to various companies. He is also working as World Bank consultant nationally and internationally. He is a visiting faculty with Income Tax Department, erstwhile Excise and Service Tax Department, Delhi VAT Department, ICAI, CMA, CAG, AGCR, NHPC, NTPC, ICSI, etc. He is a practicing cost and management accountant with overall experience of 23 years in indirect taxes, costing, and business process reengineering. He has served as member of various committees constituted by state or central government as professional bodies. Like he was member of a working group of Ministry of Health and Family Welfare to develop a national strategic plan for revised National Tuberculosis Control Program on budgeting and finance. He is an ex-member of subcommittee formed by Ministry of Health and Family Welfare for costing of health services. He is a member of advisory committee of professional member of insolvency professional agency of Institute of Cost Accountants of India, constituted under bylaws of the Insolvency and Bankruptcy Board of India. He is a member of CII Western UP Council for 2019-20. He is an ex-regional council member NIRC of ICAI CMA for 2015 to 19 term. With this, I am just handing over the session to Navneet sir, as we had already delayed for half an hour. So sir, please continue. Thank you.
Thank you, Tinku ma'am. First of all, I would like to convey my thanks to the attendees who have gathered in large numbers. Practically, I can see from my screen that many members have joined, non-members have joined, because this is the topic which is practically very much relevant in today's era and presently for CMAs. I would like to convey my thanks to Murli sir. The way I just spoke to him, sir, we should you can say go for this session. Immediately, without a blink of an eye, he said, okay, Navneet, go ahead. And second, hats off to that TRD department, which worked overnight, specifically created each and everything. And then you can say, even today we were facing so much of difficulty in, you can say, there were certain technical glitches, and ultimately we were able to overcome each and everything. And now we are before you. And thanks a lot, Raja sir, to you and your team. Really wonderful, practically.
Thank you, sir. Thank you. And IT team also, they supported us.
Yes, yes, yes. IT team too.
Thank you, sir.
So today we are going to discuss about the new section, specifically section 142(2)(a). Look, the purpose of today's session is practically much of the thing has already been, you can say, spoken by our respected chairperson Murli ji. He has left a little bit for me practically to speak about section 142(2)(a), but just I'll take something from him and just reiterate that. But yes, many things are there which we need to be very careful, because look, before getting into some joyous moments, let us try to see that what is behind all this. It is the faith of the government on CMAs. And remember one thing, if we do not perform, we may perish in the specific. We should not always think that we are getting so much of things and whatever we want, we will keep on doing. Just remember one thing, the special audits which were, you can say, earlier announced in the excise regime, service tax regime. What had happened? We have got a number of audits in the first years, and ultimately there was a silent zone at least for 9 to 10 years. It was only our, you can say specifically, I must say, it was the performance of the CMS which will be judged practically. And if we do not perform, it will be really difficult for us to move ahead in these areas. Now, going ahead, I would like to, I'll certainly discuss class by class. This is a very small section. We will discuss class by class. We will go to the specific format also. I'll discuss about the format because we have started a bit late. So definitely, I think I may get some more time. And we will be having discussions on the various, you can say, suggestions and various other queries which you are free to raise in the chat box. We will be going through those chat box queries at a little bit later stage, but we will try to address each and every query. That is what with this intention we have come over here, because we want all of you to contribute your best so that whatever the form is finalized, that can be used well for the department, for all the stakeholders, not for the department, but for the industry also, that okay, industry must understand, okay, this is the data which is required to be submitted. And let me tell you one thing very frankly, whatever data, because we were in the initial stages, we were there in the, you can say, the various discussions. Whatever the data has been asked for, there is not even a single piece of data which is not available with the organization, because the organizations are already declaring their inventory valuation since ages. So nobody can come and say, sorry, we don't have this data. If any organization come and say that they don't have this data, it means how they were, you can say, submitting their inventory valuations earlier. So we need to be very cautious while filing submission to the government. Can I say and straightway to the government and tell, sorry, we cannot give this data. If they cannot give this data, how were they, you can say, claiming each and every type of benefits with regard to the inventory valuation in the Income Tax Act? So we have to be careful. And the rightly pointed out by Murli sir, we have specifically captioned the topic mission towards transparency with CMAs. And this is the very much right thing, because inventory valuation is the area which was opaque till now. Nobody was able to get into the inventory valuation area. Being a visiting faculty with the income tax department for the last more than 20 years, I always tell that I used to ask the very first thing from the income tax officers that how you are going to check the inventory valuation. And surprisingly, nobody used to tell me that, okay, here he is checking the inventory valuation. So it remained under some, you can say, carpet, always inventory valuation. No, the government has woken up to that idea that let us try to you can say, find out if anything wrong is being done in the inventory valuation, let that come to the fore. So with that thing, we should move forward and try to educate our clients, try to educate the masses that okay, whatever is there, please try to not play with the inventory now. Days are gone. It is not, though it is a discretionary provision, but yes, impact is huge. The way again our respected chairperson has stated, impact is really, really huge because it is sending signals. This is just us. So the government has sent the signals. Look, whatever the area where they are going to find out that there is a revenue leakage, they are going to plug it up. This is a straightaway signal. And inventory valuation was an area where they found that these things are happening. They try to, you can say, plug it up. Let us move to the presentation side. I'll try to move with the speed, and there in some parts I will go a bit slow so that we can understand each and everything. So hope this is visible, Basu sir.
Yes, sir, it is visible. Yes, yes, clear.
Where it is gone now?
Clear.
Yeah. Okay, it is visible now. No?
Yes, yes, clearly visible.
Second slide came. Okay, fine.
It's clear.
So no agenda. With regard to the agenda, I'll discuss in small. Then we will go in for certain discussions. Then I'll go in for certain questions which any person might be having in his mind, and then I'll discuss about the specific provision, and then we will discuss upon the specific formats on which the specific suggestions have to be given. But before going in for giving the specific suggestions, we need to understand the provisions. Now, amendment of section 142(2)(a), it has already been explained that why it has been brought in. It is going to benefit to the sector and all the other stakeholders. Very important part is a draft inventory valuation format which has been released recently on 16th of August. All of us need to go through, and I hope that all of you might have got that format. If anybody hasn't got that format, please send a mail. You can put in the box. Most probably whosoever have registered, they will be sent with this draft inventory valuation format by the TRD department. And once we send that, so I'll request all of you to send the suggestions to our department TRD so that they can compile and send from the institute side to the ministry. Even you can, if you think fit, you can send the you can say suggestions to the ministry directly also, because we will be sending you the specific that letter which has been released by the ministry. You can just go through that. Their one email ID has already been given. Suggestions are very, very important. While giving the suggestions, we need to be very careful that whatever suggestion I am giving, whether that is practicable or not, whether the for whom these suggestions are meant, whether they will be able to execute that or not. It is not just writing one line or two line. If I'm giving any suggestion, I need to, I'll try to share with you one or two of the formats wherein we have put in certain suggestions, that what is the table number, what is the specific item number, what is currently what it currently contains, and what it should be, and what is the why we are giving that suggestion. So we need to be very careful about that. Purpose of the session, I have told you that practically overall giving, we need to find out how to give the suggestions and what type of suggestion we need to give. And apart from understanding the basic provisions of the section 142(2)(a), then next one, I have few questions which are normally come in the mind of each and every person who has to face this section 142(2)(a). So that is the thing. Amendment in the budgets, specifically this sir has already explained. Pros and cons of such amendment. Notification, I'll display the notification also. Pros and cons of such amendment. This a major amendment has been brought in. I have already discussed with you in the my initial you can say words, that this is the confidence, this is the faith the department has posed on us. We have to come what may. Without fail, we have to live up to their expectations. Without fail. And for that, if we have to work day in, day out to understand the nuances of inventory relation, we will be there. And let me assure you from the TRD department, because I am part of TRD committee also, and our chairman sir is also here. We will try to, you can say, have as many sessions as our members require across India so that we can explain in detail about each and every provision under this section. Release of form, no format has been released. Steps to be taken by CMA fraternity and the industry other stakeholders. What are the steps which are required to be taken by the CMA fraternity? One thing I have already told, for the CMA fraternity, we need to educate ourselves. We need to understand the nuances. It is not only simple thing that, okay, inventory valuation we know because we are doing it since ages. It is not like that. We need to understand it from the perspective of the income tax department. How do the income tax department wants the inventory valuation to be done? There are the n number of ICDS are there. Primarily for manufacturing sector, ICDS 2 is there. We need to understand that thoroughly. Only then where we can move ahead. Way forward. What is the way forward? Way forward is specifically that, okay, educate ourselves, educate industry, educate other stakeholders so that we can move along with the intention of the government. Big question. Can we expect any behavioral change among corporates and other assesses? I hope it will happen. Behavioral change will be there. We have seen that in the when IBC was brought in, a tremendous change in the behavioral change came into the, you can say, director's mindset. Same is going to happen here also. With the GST, also there is a drastic change in the behavioral change among the various, you can say, assesses. Same thing is going to happen, because if I know that, okay, my inventory valuation can be checked at any particular point of time, I will exercise caution. And that is what going to happen. Let us go to the few questions. What section 42(2)(a), that is inventory valuation, related to inventory valuation, I'll go with a little bit speed. Can the amended section 142(2)(a) create a sense of product level costing among the organizations to efficient, effective utilization of resources? I have answer for this big yes. The reason being, because till now what was happening, because all of us keep on working with the various organizations, and we know that what happens practically in the various organizations, whenever inventory valuation has to be done, that is done on various, considering various parameters. Everybody knows that nobody is going to get into the details of the costing each and everything. And even at the top level, nobody is aware of that, okay, at the product level costing is available or not. If it is available, how it should be used, all those things are there. And once if these things are there, because if you go through the formats, I'll take you to the format, you will find that here, not at the HSN code level, but at the product level, in, you can say, inventory valuation has to be done. And that is as per the ICDS 2. It is not that it is anybody's sweet will that anybody is asking for in product level inventory valuation. It is as per the provisions of the Act, provisions of ICDS 2, provision of various rules. So if it is already there and costing is required, once if we are talking of product level costing, it means we need to create all the backup data. And if we are creating all the backup data, certainly if the management is aware of that, product level costings are there, they will definitely like to have a look at the product level costing data. Though it will be used for the inventory valuation, but yes, these will certainly be used by the management. Only thing is that they should become aware of that. And how, that is another thing. Whether the recognition of CMA under Income Tax Act will create more opportunities? I say yes, certainly we are likely to get more and more opportunities. And moreover, many of the CMAs earlier used not to, you can say, get into the Income Tax Act because our name was not there. Now our name is there, not only inventory valuation, but in other areas maybe return filing and another consulting areas, they should, and they must get into that. This is a much bigger area where our CMS must get into, because inventory valuation has just given them, you can say, basic footing on which they can stand and then start their practice under the Income Tax Act also. Whether inventory valuation under Income Tax Act can be done by any professional other than CMA? Yes, inventory valuation can be done by any professional other than CMA. But when we talk about section 142(2)(a), it is only and only exclusive domain of CMS, nobody else. A very beautiful thing had happened while discussing this about section 142(2)(a). I still recall when we were having a discussion, and it was stated that, okay, sir, there should be a concept of dual checking by the authorities. Let one thing be checked by the one auditor, which is already there as a special auditor. Let the another thing be checked by the another practitioner, another professional independently, so that there is no overlapping of one over the other. And that is what you can see in the section that has transpired in the section specifically. Who will assign the work of inventory valuation under section 142(2)(a) of IT Act? Remember, I am talking about inventory valuation under section 142(2)(a) of IT Act. Companies are not going to assign under section 142(2)(a). When we talk about section 142(2)(a), it means it is only and only Income Tax Department who will be assigning the work. But yes, because Income Tax Department is having faith on us, certainly the organizations will be having faith on us that, okay, if they are employing any particular CMA and they know that, okay, inventory valuation if at any particular point of time department wants to go in for an inventory valuation under section so and so, it has to be done by any cost accountant. Definitely the organization will place much more reliance on CMS. Can companies directly assign the work of inventory valuation? Certainly, and this is the area where one must venture into. I am personally doing inventory valuation of a number of companies. So companies do, you can say, assign the work of inventory valuations. These are the areas. Look, while going in for the session, I am telling about the newer areas, newer opportunities, and newer threats. When will the work of inventory valuation under Income Tax Act be assigned? A bit later. Let us park this question. In my next slides, it will come automatically. What type of report is to be given? Again, format 6C has been released by the you can say in CBDT, and we have to specifically give the report into that format only. Whether any such report of inventory valuation is available till now, it was not available till now, but Form 6C has recently been released by the CBDT. We need to understand that thoroughly, give the suggestion, get it amended wherever required, and then we need to give the report. Once it is finalized by the CBDT, then we need to give the, you can say, report in that format only. Thank you, Murli sir, because whatever I had mentioned in my, you can say, PPT, you have already touched upon that ultimately bankers may ask for these type of reports, and bankers may rely on whatever the CMAs are doing, because ultimately CBDT has posed faith on CMAs with regard to the inventory valuation. Sooner or later, bankers may start. So we have to be very careful, because ultimately the companies which are having, you can say, loans from the organizations, loans from the bankers, they should think of, you can say, getting some sort of vetting by CMS with regard to their inventory valuations. One very important question: whether the amendment under section 142(2)(a) of Income Tax Act is applicable to companies only, because we as CMS, we know only companies, and not only companies, companies above a specific exceeding certain turnover, fulfilling certain criteria. We talk about only those companies. But let me tell you, under Income Tax Act, all the assesses have been covered specifically. Almost all, barring a few, almost all the assesses have been covered. It is not applicable on companies only, it is applicable on other assesses also, and specifically which are under audit. What needs to be taken care of by cost auditors? This is very, very important thing which we need to understand. As a cost auditor, if I'm going to finalize any cost audit report, tomorrow if any other cost accountant comes and goes in for the inventory valuation, if there are drastic variances among the inventory valuation which I am reporting in my cost audit report and another cost accountant which is coming and you can say identifying certain things which I have not taken care of, then the department may take care of me. So I have to be careful as a cost auditor. All cost auditors, all the organizations, while final, because finalization of cost audit report means that directors are signing on those reports. Directors are also responsible for those reports. And if they are signing without considering all these aspects, apart from the cost auditors, definitely the board of directors are also responsible. So we have to be careful. Now I'm sharing with the beginning of the journey with regard to the inventory valuation. This was a team which had the first meetings with at the CBDT level. So I just wanted to show it to you that okay, just remember. Now I'm pushing a little bit fast, then I'll straightway go to the, because we need to keep some time for specifically for the discussions on the points which you raise in your specifically chat box. I will go through that. I always tell that this is my you can say slide from the initial presentations on inventory valuation. Remember the golden budget day for CMAs. Always remember 1st February 23 when we got the recognition under the Income Tax Act practically. Because till date it was not as such great recognition earlier, but now we got too much of a recognition under the Income Tax Act. 1st February 23, the golden budget day for CMS, and next date is 31st March of 2023 when Finance Act got notified and finally recognition was there. So remember these two dates. Now, apart from that, earlier my question was that when the assignments will start flowing. It has been stated that it is the section 71st section of the Finance Act 2023, section 142 with regard to that. Now, section 2 to 127 shall come into force on the first day of April 2023. It means it will come into force on the first day of April 2023. We need to keep our fingers crossed. Department may start issuing the orders because this section will come into force. Nowhere it has been mentioned that the data with regard to the assessment year 23-24 will not be taken up. It may be taken up. It will depend upon the department. How do they take it up? So this is what we have already discussed to plug up the loophole. It was brought in, and very important part is that section 142(2)(a) of the Income Tax Act is in two parts. Always remember, one part is taken care of the another professional and the CS chartered accountants, and another part is taken care of by will be taken care of by the cost accountants. Clear-cut demarcation of the responsibilities under the Income Tax Act with regard to the special audit, it is there. And the second more important thing is that while if you go to at the background notes of in the budget, they have specifically referred the section 148 of the Companies Act with regard to maintenance of cost records. So remember, when Income Tax Department is looking for this thing, so they are already aware of that. Okay, section 148 of the Companies Act is already there, based on which you have to go in for the working out of the cost of production and whatever cost of production which has already been vetted by a cost accountant, which has been you can say approved by the board of directors, can they take it or not take it? And section 142(2) is already there. Again, our chairperson has in the beginning remarks told that this audit section 142(2)(a) valuation will be irrespective of the any audits, any particular different type of reports which have been filed with any of the authorities. It will be an exclusive you can say special audit area, inventory valuation. So nobody can go and tell that, okay, I have got my cost audit done, why should I get my inventory valuation done? So no, it is entirely a separate thing. Now, for the purpose of simplification, I'm just telling that this particular provision can be category of persons can be segregated into two categories. Companies where section 148 of the Companies Act is applicable and maintenance of cost record is required. I'm not talking about cost audit, I'm talking about maintenance of cost records. The organization exceeding 35 crores of rupees, where it is already there, because if directors are telling that cost records have been maintained, it means cost of production is already there and they have already used that cost of production while you can say working out the inventory valuation practically. And tomorrow if any you can say auditor is appointed, any cost accountant is appointed, they need to justify whatever they have mentioned in their returns. Valuations are mentioned in the so far the inventory valuations are mentioned in the returns, income tax returns. In 3B, some sort of you can say different details are given. Quantitative details are there, but when we talk about, look, one very important thing which we need to understand. When we talk about inventory valuation, we need to take into consideration both 3CD and income tax return also. In 3CD, you will find the quantities. In income tax return, you will find the valuations. So it is, so I need to understand from where I have to take the data for vetting, for working out the inventory valuation of the organization. So this is what I have already talked about that with regard to the year, for which year it will be mentioned. So I'm moving ahead with the next. Let us go to the specific section, what it is all about. First part is specific, it is section 2A. The part which is shown in this slide is applicable for both chartered accountant and cost accountant. What is there? Remember, because as a CMA, I had told you about the way forward. The way forward is that because we need, when we are going to interact with the assessing officers, we need to tell them also that, okay, sir, this is the way you can say ask the assessors to get their inventory valuation done. How you can ask, how you can tell them. If and at any stage, at what point of time that this can be issued, order can be issued, at any stage of proceeding before him, the assessing officer, and at any stage of proceeding during the you can say proceedings before the assessing officer, he can go in for this thing. But how? Having regard to the nature and complexity of the accounts. Accounts should be complex, maybe multiplicity of various n number of organizations are there. Complexity of accounts means n number of index applicabilities are there, which a normal man cannot understand. N number of things are there. Volume of the accounts, lakhs and lakhs of line items are there. Hundreds of you can say locations are there. Volume is very big. Doubts about the correctness of accounts. Correctness of the accounts. Now I'm giving you one example. Yesterday, while sitting with one of the persons, I was discussing, okay, that okay, I just saw that two inventory valuations for 2 different years. And in 1 year, it was a big company. In the last year, if the inventory valuation was 1,000 crore, it was down by 300 crores in the next year. Best part was that in both the years, the turnover remained same, the raw material ratio remained same. So obviously there was something more to it, that okay, how come my inventory has reduced drastically, but my overall, you can say, top line has remained same, and my you can say raw material ratio has remained same. It might be just because there are a number of reasons one can find out, but yes, at the first instance, prima facie, there seems to be something fishy. Next, multiplicity of transactions in the accounts. Multiple transactions are there. Specialized nature of business activity of the SSC, like you have construction business, real estate business, you have steel business, so you have fertilizers business, you have a business of you can say various type of fragrances. So n number of businesses are there, specialized nature of activities are there. Important point is that it has to be in the interest of the revenue. And the department officer need to understand that, and is of the opinion that it is necessary to do so. Means he should consider that it is necessary to do so, then he can, with the, you can say, permission of principal commissioner, chief commissioner, or principal commissioner. Principal chief, 4 type of commissioners: principal chief commissioner, principal commissioner, chief commissioner, or commissioner. He can direct the SSC. I'm straightway reading out from the provision to get either or both. This is very important for all of us to understand. Some persons are of the opinion that okay, only it will be ordered when special audit by a CA is there. Sorry, it is not the case. Even if there is no special audit, only inventory valuation can be undertaken by the department, can be ordered by the department, because the provision is like that. To get either or both of the following, it is not necessary where special audit is there, inventory valuation will be done. It is not necessary where inventory valuation has been ordered, special audit will be done, separate special audit will be done. So we have to be very clear. Now, go to the highlighted red part. I'm leaving the first part. To get the inventory valued by a cost accountant nominated by one of the 4 different type of commissioners and to furnish a report on such inventory valuation. When we talk about furnish a report on such inventory valuation, straightway our today's topic is that format 6C. We are straightway moving to format 60. We have to give the report only and only in that format. Very important. In the prescribed form, duly sent and verified by such cost accountant. Now, who will be such cost accountant? Again, question comes up. Who that cost accountant will be? How will that cost accountant will come into picture? My dear friends, across all the chapters, we need to start listening with the department and approach commissioners, chief commissioners, so that we can tell them that this is the provision. Please initiate the process of empaneling cost accountants. This is very, very important. Whosoever from the different chapter or regions are here, it is my earnest request to all of them, start listening with the department, brief about, give them the brief about our profession, ourselves, have discussions, organize physical seminars or webinars with the income tax department across India, with the industrial association, so that we can tell them, okay, this is the area where we can be of some help to the industry also. Because today, if any of the industry is not following the norm and tomorrow suddenly this type of audit comes, this type of inventory valuation comes into picture, it will be difficult for that person to sustain. It might be in some cases. Now, setting by such cost accountant and setting for such particulars as may be prescribed. Remember, such particulars as may be prescribed when we are talking about whatever has been prescribed in the form 6C. Now, very important thing, and such other particular as the assessing officer may require. It is not only that whatever you can say has been mentioned in the form 6C, only that has to be given. We may be required to give the another particulars also as the assessing officer may require. Next one, very important. Provided that the assessing officer shall not direct the assessee to get the accounts so audited or inventory so valued unless the assessee has been given the reasonable opportunity of being heard. He must be given the opportunity of being heard. Yesterday, while preparing for this session, I was going through one case which was in the High Court or Supreme Court, and before issue of the special audit order, at least more than 80 communications were exchanged between the company and the assessing officer. And this special audit order was issued. The assessee went in for appeal, writ petition that it should not be ordered because I have not been given the opportunity of being heard, or if I have already submitted the data, they have not relied on that. The honorable court states they refuse to entertain the writ, stating, sorry, you cannot say you were not heard. You were given the opportunity of being heard. You have already submitted so many details, and if the department is not still yet satisfied, you have to undergo the special audit very clearly. But at least if assessee requires the you can say a reasonable opportunity of being heard has to be given. So if we are talking about opportunity of being heard, for that again, let us say an assessee is asked to submit some details of the inventory valuation, and the company says okay, they are submitting some sort of inventory valuations, and if he raises 2 or 3 more questions, the company is not able to explain that, then again the company will be in a suit. So better it would be they have at back end at the item level backups, RNC and conversion costs of the inventory valuation, so that they can justify it to the income tax department for the figures whatever they have shown in the income tax returns, so that the ultimate this exercise is not undertaken. Because once this exercise is undertaken, it is really will be a problematic for the organization. So better it would be for the organization on a cautious note to be on a safer side, they must have proper backup and detailed item level costings, and especially where the cost records are required to be maintained. Let us go to the SWOT analysis of CMAs. We always keep, you can say, telling the members we are so, but here let us say, what are our strengths with regard to the new provisions under the Income Tax Act? Strength, expertise of CMAs in analysis of financials and costing of products. Certainly, we have too much of a strength. We can do each and everything with regard to the inventory valuation, but in comes to where our CMAs can work out the inventory valuation of lakhs of products in an organization. So many of might be doing right now. But what are the weaknesses? Till date, the CMAs were, you can say, conducting cost audits, doing the cost records maintenance, and no much of, you can say, inquiries were raised by anybody, neither by the organization. Whatever we were reporting, nobody used to have a detailed look at that. Even the authorities didn't have a look at that. But no, remember, these inventory valuations can be checked by the income tax department, therein having direct impact on the taxes to be paid by the organization. So here we need to have exhaustive training. We understand the things as a CMA, but remember, even we have to learn a lot, because what does the department want? If I have to submit a report, how should I submit the report? If that, look, I had worked in for some of the special audits. The different things are there because they need the data detailed backup for issue of the show cause notice. If you are going to issue the show cause notice, what will be the relied upon documents? How to collect those documents? Because ultimately, remember one thing. If I'm going in for any inventory valuation, that will certainly be there will certainly be a litigation. And if it is going to be a litigation, because nobody is going to make the payment to the department just because one cost accountant has come and has stated that, okay, your inventory valuation is not correct. Whatever I am submitting, that is correct. Whatever a cost accountant is stating, whether he has a proper backups, whether it is going to help the department in issue of show cause notice if the SSC doesn't agree to the outcome of the you can say outcome of the inventory valuation exercise and pay up immediately, whether the CMA will be able to provide all the relied upon documents which are required. So these are the areas where exhaustive and extensive trainings will be required. And certainly we have a large pool of you can say experts, legal experts we have, at TRD also we have. We will certainly take their services so that we can train our members. Opportunities. This particular provision is bringing in a plethora of opportunities for the CMAs. One is costing and another one is inventory valuation. Primarily inventory valuation, but at the back end, no inventory valuation can be done until unless there is costing. And if you get into the costing, definitely you can go in for performance appraisal of the organization also. It depends what is the mandate you have got. If you are going in for a detailed, you can say costing, you can analyze in n number of ways. You can help the management also. Till date, whatever the cost audit report which was not used by anybody, let me tell you, it is being utilized as of now by the GST department already, and the income tax department will be the next one to start using. Next it will be the bankers, the way our Murli sir has already stated. These are good. These things are bound to happen. Nobody can stop that. Frats. All goody things we have spoken about. Now the question comes, if I do not perform, what is going to happen? So much of, you can say, trust has been posed on us. So much of trust we have got. And if we do not live up to the expectations, what is going to happen? Regulators are not going to rely upon us. Let me tell you frankly, because we keep on meeting with the regulators. We always say we are not being given this opportunity, we are not being given that opportunity, and number of things we keep coming across. But let me tell you, if our members get the chance, please work in a collective way so that you get the best brains to work on a single assignment, perform well, so that you can finally live up to the Supreme Court, so that even if the SSC moves to the Supreme Court, we should be able to withstand our figures, whatever we have stated. There should not be backtracking on the figures. Sir, ye chhoot gaya, ye maine dhyan nahi diya, wo dhyan nahi diya. Whatever figures in the inventory valuation we are going, remember, please remember, we need to withstand those figures even till Supreme Court if we get the chance. These are very important things for all of us to understand. Next one. अब आते हैं फीस की बात पे. Now, most important thing I always tell whenever I am conducting sessions, I am very much peculiar about fees, because if we are working hard for any of the organization, ultimately I should know who will be paying my fee, when it will be paid, whether I will be getting good amount of fee, yes or no. So here, let me tell you, here the department will be making the payment based on the certain criteria. Payments are good. As of now, whatever is there, payments are really good. And you don't have to be dependent on the SSC to get your fee. Because I still recall earlier special audit used to allot the special audit in the Delhi sales tax department. They allotted some sort of, you can say, special audits to us. We conducted the special audit and ultimately the person against whom we issued the report, and ultimately at the end of the day, we had to keep on, you can say, asking that person, we will keep on requesting that person, yeah, please give me my fee, please give me my fee. So at that point of time, department had taken the report and said silent. So this is very important for all of us to understand. Here that is not the case. It will be paid by the central government for both the things, audit or inventory valuation. Again, the assessee shall where the assessment is made under section 144. If the assessment is under section 144, so no chance of opportunity of being heard has to be given for the material. No, remember, opportunity of being heard has to be given at 2 times to the assessee. One, before issue of the inventory valuation order. Second, after the issue of the inventory valuation order, but before taking any action on the report which has been submitted by the CMA. The inventory valuation shall accept where the assessment is made under section 144 be given an opportunity of being heard in respect of any material gathered on the basis of any inquiry under section 2 or any audit under subsection 2A and proposed to be utilized for the purposes of assessment. If department is likely to use that for the purpose of assessment, certainly the opportunity of being heard has to be given. So make it a policy. I used to do that. Whenever we used to come up with any type of adverse, you can say, adverse report with regard to any of the assessees, we used to send that report asking for his comments. So that at no particular point of time the assessee can claim that he has not been given the chance. He is not aware of the report. Whatever report has been given, that is incorrect. 2 or 3 times the report must be sent to the assessee. This is just my opinion. Now, the companies where cost records maintenance has been mandated must take the cost from cost records being maintained at item level for the purpose of comparison of cost or NRV. From the cost records, we need to take the cost for the purpose of comparison of cost or NRV. This is what will be required practically while reporting. When we are conducting the sessions, we are just making aware the organizations. Look, if you are falling under section 148, you are required to maintain cost records because my directors are giving a declarations. My auditors, financial auditors is giving the declaration that cost records have been made and maintained. If they are doing that, and when any inventory order is issued, and if the person tells that okay, he is not maintaining the product level cost, so it means whatever they were declaring, they had given the wrong declarations, even auditors and directors also. Because in the costing, we are supposed to maintain item level costing. So now next one comes, it is very, you can say practically not visible fully, but yes, this is an order of empanelment of various, you can say firms by one of the chief commissionerate. It is not that while going through the, you can say, different empanelment orders, I could see not many, you can say firms get the chance to get empaneled. Very few firms get the chance to get empaneled. But my request to you, start, or you can say having liaising with the department, so that if your firm is well established, firm is having certain criteria which they fix it up. There are certain criteria. We will be discussing it in detail. Once we are over with the suggestion, then we will discuss in some of the another sessions how to go about that. This was just that thing. Now I'm coming up with the ITR 6, just telling you from where the data can be collected. ITR 6, you can see that opening inventory, closing inventories are mentioned. FG details are also mentioned, opening, closing are also mentioned. So we look here, we are talking about only values, the way I had talked in my session earlier. Only and only, you can say, specifically we are talking about we are talking about specifically inventories valuations over here. Quantities are somewhere else. I'm moving a little bit fast. We will discuss it later because time is, we are running short of the time. This is the way that I had shown earlier. Again, it is there. Now, Form 6C. I'm coming straightway to the Form 6C. It is report and annexures. I will be taking few more minutes and then we can leave it because our session started 20-30 minutes late. I will take the opportunity to, you can say, discuss a little bit more, take more time of yours. Extremely sorry for that. But yes, certainly we will have another round of sessions. But let us try to first of all understand Form 6C, on which you have to give the suggestions. Form 6C. A first part is report, another part is annexures. The report is like that report, the way we give the look, you consider it on the same pattern as our cost audit report and annexures are there. One is report, another one is annexures. Right? Let us go inventory valuation report under class so and so. Then what is there? Declaration and certifications are there. What declarations are there? That you have examined the inventory. You have conducted the inventory valuation. Now, question is that what do we mean by examine? That is the area. Now, let us say why I'm bringing it before you, because we need to give the suggestions. You may find it when we are talking about examine the inventory. What does it mean? Did I examine physically that inventory or not? Or what was there? Because I am getting today, I have to do the inventory valuation. How I am going to examine the inventory? Or we are talking about examining the inventory. It means examining all the details of the opening, closing, and movement chart of the inventories. We are talking about that. So that is the clarification which may come in the guidance note, or you may give certain suggestions to modify it. That you have conducted the inventory valuation, perfectly right. Next one, you have to give the declaration that proper books of accounts you have been made and maintained, and you have got that. Comments to be ordered. If you find that something is not mentioned there, please add it over here. I still recall in one of my you can say special audit cases, in the 3CD, the auditor had specifically mentioned that the company had not maintained the detailed inventory stock ledgers. So we need to understand, if we are finding anything, we need to mention whether inventory, whatever inventory valuation is there, whether that is appropriate or not, or something more was required to be done, whether he has taken precautions to ensure that proper inventory valuation has been reported. What that prescribed particulars he has got. He is providing all the prescribed particulars with regard to the inventory valuation, and more importantly, any other particulars which have been asked by the AO, those are required to be submitted along with this report. Variations in the inventory valuation report. Are there any variations in the inventory valuation report? Whatever the inventory valuation which has been reported in the, you can say, what has been reported in the income tax return in the 3CD. Look, I'm not talking about till now financial audits, audited financials. I'm talking about income tax return. I'm talking about 3CD, because ultimately whenever you can say inventory valuation has to be done, we need to go for that inventory which has been considered for the purpose of computation of tax. And 99.99%, whatever the inventory which has been reported in the financials, that inventory is taken in the income tax returns also. So we can say that, but yes, when we are talking about it, we need to use that. Notes, I'm going with a few of the notes. Where any matter of the, you can say, stated in this report is answered in negative or with a quality. Look, again, let me remind you that we have to give the suggestions. If you find any note is not correct, please give the suggestion. They are said where any of the matter stated in the report is answered in the negative or with a qualification, the report shall state the reasons thereof. If I'm stating that I didn't get the detailed information, I must mention what type of information asked for and what was not given. Next one. Now I'm coming to the main parts. That okay, there are 13 total points are there under which we have to give the information. Normal information of the SSC is there, address, date of incorporation, date of business. Now, here suggestion might be that we are talking about date of incorporation. We have not mentioned date of birth. Let us say whether the inventory valuation can be conducted by a proprietor for a proprietor business, yes or no. A proprietor might be having hundreds of crores of business. So here date of incorporation is there. Suggestion might be that okay, it has to be include date of incorporation or date of birth should be there. What is the nature of business, proprietorship, partnership, or whatever is there. Details of principal products in which products the organization is into. Details of books of accounts maintained with respect to the inventory. Be very careful when we are reporting it. If we are not getting the stock ledgers, do not report that you have got the stock ledgers. And second thing is that what if I need to modify it, what type of suggestions you can give, what should be mentioned over here. No, I'm discussing the various tables and their various points wherein we need your support so that you can send your suggestions to the department also, to the ministry also, but to our sorry institute also, TRD, our tax research department. You must be sending your all these details, whatever suggestions are there. Method of accounting applied with regard to inventory maintained. Indicate whether there is any change from the method of valuation employed with respect to inventory maintained in the immediately to preceding previous years. Whether in the previous 2 years, whatever the inventory valuation accounting of metric was there, whether that has been used, same method has been used or not. What was the method of valuation of opening and closing stock? These are things on which as a cost accountant I have to give the answer. If I'm not getting anything clarity on it, what should I ask the department to put a line over here? Because right now this is a purely a draft. It will get finalized once after 31st of August because we need to submit our suggestions by 31st of August. Now while going through these things, many questions might be coming to your mind. So please do ask these questions and give the suggestions also that if we write in this way, it will be better. We will be able to understand easily. Summarized details of financial results are also there. So now one suggestion format. This is the format which I have designed that how can we go in for that. Item number in form 6C 12. Item number is 12.7. Summary of inventory valuation for the reporting year. It is given in the header. Within that, draft for public what is mentioned value as per form 3CD. If form 3CD not filed, then value as per audited accounts. We have mentioned let it be there value as per relevant income tax returns. Somewhere it might be ITR 5, somewhere it might be ITR 6. Or audited financial results if that is not there, considered for working out profits for computation, income tax computation. Because in form 3CD valuation of inventory is not shown, rather only quantities are shown in para 35. So modification will give direct relationship with the audited financials or maybe with the returns. So this is the way we should be writing because we would love to tell you that okay, please improve upon the format, whatever the way you want, do it the way you want, but give certain complete suggestion there so that those could be incorporated in the final form. This is the format. Look, you can see 7 number. This is 12.7 value as per the form 3CD. This is what I have mentioned here as here in 12.7C. Opening closing is there. Values per cost accountant, variation defining. It is there. So we are talking about only this header. This. So let us move ahead. Rajesh sir. Rajesh sir, are you there?
Yes, yes.
Sir, how much time I can take more? 10 minutes?
Yes, sir. Because
Okay,
already
fine.
attendees number is decreasing.
Okay, fine. I'll
Yeah,
take.
because we need to finish it up first now.
No, I'm just finishing it up because this is
Yeah.
mainly format of suggestions were there, and what I'm telling them, this is what. Now, what is
Carry on.
there? What is there in the you can say formats? Better it would be. I'll straightway go to the format. That will be an ideal way out rather than going through the PPT because we are left with less time. Let me go to the PDF format, sir. Sir, whether okay, it will not be visible. I'm just uploading my this thing. Sir, hope form is visible. The form which has been released by the Ministry CBDT.
Yes, visible, sir.
Okay, fine. So look, sir, this is the form which has been released. This is the forward, and then I had talked about the various declarations or certifications which we are required to give. Remember, it has to be given with the UDIN also. This is very important for all of us to understand. Here also we must have UDIN. And this is first part forms numbers of the inventory valuation report I have already discussed. Now I'm going to discuss about where we need the support of all of you with regard to the suggestions. And if you find it that everything is okay, nothing like that. So I'm coming to first 2-3 parts I had discussed. I'm coming to point number 7 over here. Just to see that method of valuation of opening and closing stock of the following inventories. Different type of inventories have been mentioned over here, and if you consider that more and more items have to be, you can say, included in this inventory valuation, so please do let us know. Send a mail to the institute TRD department. We will incorporate that because it is based on the understanding that normally these type of items will be there. Firstly, we thought of bringing in last item. You can say department might have thought bringing in last item others, but it was deliberately left out. Let us be very specific what type of items are there, so that it should not happen that all the persons start putting in the, you can say, inventory in others and just close the chapter. That is why a very specific thing has been mentioned. So please do let us know. Any change in the inventory valuation, it is there. We have asked for the inventory. Now you can see we have asked for the details of financial results. Whatever the financial results are there, this is what we should be mentioning. Here today I got one suggestion that point number 13 over here should not be there. Average, because we are on the top, we are talking about details of financial results, and at the back end we are talking about average unit goods to cost of sales. So it was stated that why should we keep it over here? Let us try to remove it, because whatever the data which is flowing from the, you can say, specifically financial, that should be taken. So that is what we need to understand. Inventory, average inventory holding period has been also been mentioned. Formula is there. This is what you can go through that and just give certain suggestion. If you find that okay, it should be like that, it will be taken over. Next one is raw material. Look, Again, this format has been devised in a way that two things are required to be given. One is detailed about the raw materials at item level. Remember, we are talking about item level raw material details. And when we are talking about item level raw material details, and here we are talking about quantitative details, not value in para number 9. Only and all quantitative details. Some persons may say that it is very difficult to maintain. How can anybody say? Because on the raw material, if any organization is claiming the benefit of ITC, the organization have to maintain that. Moreover, in many of the organizations, they have to maintain it because items are like that, because these are forming part of different bill of material items. They need to keep a full track of the item. So different detail is there. Just go through the note. Give the suggestion on the note or the format also. Note is there. Inventory of all such raw material items that constitute top 80% of the total inventory value of raw materials should be reported item wise separately. Leverage has already been given so that organizations can do not come and say that it is too much, because normally one Pareto analysis is there, because of which we can say normal top 80% falls in the top 30 to 40 items. 80% of the items should fall practically. So we can ask the organizations to just give these type of details. They are supposed to maintain all these details, and rest can be clubbed under the others. Give your suggestion. Do you want 10%, 100%, 20%, 30%, whatever you deem fit, just put it over there. Give your suggestions. But from our side, 80% is the perfectly right thing. We are giving our opinion also. Once you have we have gone in for raw material quantitative details, then it will come to the quantitative details of goods. You can say finished goods. Remember, we are talking about item level finished goods. That is why item code is mentioned over here. If you see, item code has been mentioned. Unit of measurement has also been mentioned. Unit of measurement, which type of unit of measurement is there? FG. Opening stock, quantity manufactured, purchase. One major thing which has been mentioned over here, quantitative adjustment. The way it is there in our, you can say, if you might have gone through the cost audit and extras maintained under section 148, quantitative adjustments are there. Within the cost of quantitative adjustment, for that one more para is there to be quantitative adjustments. It means in whatever quantity there are variances, you need to give the reasons. If there are quantitative adjustment in so and so, furnish the detailed reasons for quantitative adjustments. Why the items are there in the quantitative adjustments? Because ideally we have theoretical opening plus purchases, my opening plus production minus sales is equal to my closing stock. If this is not happening, that goes into the quantitative adjustment. Why the things are there in the quantitative adjustment? If the person has any reason for that, so you can give more and more suggestions with regard to that. Next one is now we need to give a details. Whether the assessee has conducted the physical verification. If yes, whether any discrepancies were noticed, you need to, the auditor, the inventory valuer has to ask for the inventory valuation report, you can say physical verification reports also, so that he can have a look at that. Whether evaluation is in conformity with the ICDS notified under so and so. Most important thing is that wherein a CMA has to put in his best is that one needs to prepare different checklist with regard to different ICDS, because different companies may have different ICDS applicability, and we need to go through those particular ICDS for working out the inventory valuation. Very, very important. Next one is inventory valuation. A very, very simple, I must say, simple format has been given. Very, very simple. Simple thing is that What is the description? What is the item code? What is the unit of measurement? If you can go through your FG movement charts, which we are preparing under the when we have to prepare the costing or cost audit reports, we are normally have these type of charts, and within that charts only opening closing stock have been taken over here for valuation purposes, nothing else. Quantity and then cost of production or purchase value. If there might be the cases that your final goods are there which have been purchased, which are traded goods, then you have to mention the purchase value, otherwise cost of production and whatever is the NRV. Lower of the two has to be there. And when you are putting the data over here for a particular product, remember, compare for COP1 with the COP2. Because if we are not able to do that, again we will be in trouble. It should not happen. My opening stock is having a rate of 1000 rupees and closing is having a rate of 5000 rupees. So we need to be careful. Work in process, simply no more details, but at the back end you need to maintain details. Simply what is the, you can say, valuation of the work in process is there. Opening, COP, NRV. So all those details are required to be given. Quantities are not required here over here, but in work in process, but at the back end you are required to keep all those things. Quantity rates, sorry, rates are there. Next one is there, valuation of raw materials. Again, firstly we had quantitative details, then we have value details with regard to the inventory valuations, and once we are through with the different type of inventory valuations, then it comes the summary. And in the summary, the final thing which comes is impact on profit and loss and impact on income tax. Remember, we need to justify this income tax, whatever the impact on income tax is there. So just go through that. If you find that, okay, more and more suggestions should be, more and more modifications are required, do let us know. So because we can put it before the CBDT. So remember, we need to work hard on this. We need to put in our labor, put in best. Sir has come, so sir is telling Navneet, please close. So I'll take just 2 or 3 minutes more, sir. Whatever the formats I had told, those are the formats which were there specifically for under ICDS 2. Now there are another format. It is not only which that ICDS 2 is applicable. N number of ICDS are applicable. ICDS standard 3 is there. Apart from that, separate ICDS. You can go to the ICDS 2, and in ICDS 2 it has been mentioned that ICDS 2 is not applicable on these particular transactions or these particular items. And for those particular items, different tables have been given. So I think I have, sir, I have already touched upon almost all the things that impact on profit and loss is there. So I'll just want, sir, I would love to just go through the specific queries if these are there, so that we can just have a look at the, if anybody has mentioned in the chat box certain query, we can go through that. Otherwise,
I cannot see any query in chat box. So maybe this is the first time we are coming out with such a discussion. So for the participants, our request is, if you have any query, you can send it to us, trd@icma.in, and we will definitely send it to Navneet sir and respond to it. Sir, Navneet sir, do you want to say any more thing?
No, nothing. Only I would love to receive more and more queries, more and more suggestions from them, because ultimately, if they give us the suggestions, our final format will be in a much better shape.
Yes, and kindly send us the suggestions by 25th of August, because we also need some time to compile, and finally it has to be checked before sending it to the Ministry and CBDT. So it's our earnest request that kindly send it by 25th of August. And obviously, as Navneet sir has said, and our chairman, direct taxation committee has also said that we'll also come up with more and more such type of webinars and seminars once the final draft comes out, because 31st August they have given, CBDT has given the date. So maybe, sir, Navneet sir, what do you think? Maybe another 10-15 days, by another 10-15 days, it will come out from 31st August. Hello. So, sir, can we end our today's session here? And before we conclude, I just want to tell the viewers and participants that we will be conducting 2 more webinars on 4th and 5th September, specifically on ICDS. On the ICDS which are required for the inventory valuation report, like ICDS 2 and ICDS for shares, debentures, etc. So on 4th and 5th September, this webinar will be there on the ICDS only. Thank you so much, sir. Thank you so much for joining, Murali sir. Thank you so much. Navneet sir, thank you so much. And we are thankful to all the viewers, all the participants for joining today's session. Hope this will get more suggestions and will be sending to the CBDT. Thank you so much. With this, we are concluding this session. Thank you. Thank you.
Thank you very much.
Thanks.